Let me also welcome on board Pranjul Bhandari then from HSBC Securities and Capital Markets to talk about what she's penciling in terms of GDP. Pranjul, hi, good morning. Good to have you on the show. It's a wide range of the GDP number for the fourth quarter that we are penciling in this time around. Pranjul, what's the number that you're working with?
Yes, thanks for having me. And you're right, it's a very wide range. There are just so many moving parts this time. So for GVA, we have a positive growth of 1.6% year on year. But for GDP, we have a negative growth, minus 1.4% year on year. And there are many reasons for this. I think the reason for positive GVA is that, second wave started. January and February were actually pretty strong. Some of the local lockdowns came in March. So March was very weak, but Jan, Feb were very strong, particularly for manufacturing. So that's bumping up the GVA growth. But this entire GVA growth is not translating into GDP because the government, if you recall, in the budget announced a new plan that it would pay FCI, the Food Corporation of India, some of the old subsidies that were due to them and that the government was not paying for the last couple of years. Now, the FCI does accrual accounting like any company, but the government does cash accounting. When the two meet, there is a clash. And what is happening this time in GDP is that the CSO is calculating all the subsidies being paid for last few years subsidy program as this year's subsidy, subtracting a lot more from GVA and giving you very weak GDP numbers. My own sense is trust GVA numbers. Don't trust GDP for the next couple of quarters. They are distorted because of the government's plan to pay old subsidies. Trust GVA, and the GVA we think is going to be a positive 1.6% growth.
That's interesting. What sectors do you think, Pranjul, then would weigh heavy? Because we anticipate that, agriculture, government spending is actually going to support the GDP numbers.
Yeah. Look, I'm going to say GVA. You can say GDP, but I think GVA is the number to track. The numbers that are going to support the positivity, I think, is manufacturing, which we think is going to be close to a positive 6%. For the simple reason that, IIP has been extremely strong. PMI manufacturing has been extremely strong. Everything pent up by last year's pent up demand. So all of that is looking very good. I'm hopeful for manufacturing. On the other hand, I think trade and services may be a little weak. In fact, it could touch negative growth for the simple reason that some of the lockdowns started happening in March. So that is going to come into the, the numbers and sort of drag it down. So generally, industry very positive, services not as positive. Another moving part here is fiscal. Tonight we'll also get a number of fiscal deficit, fiscal expenditure revenues for the March month, which is going to be extremely important to get a sense of, so what was the government's role in this whole pandemic period? Did they do enough capex? Did they, give all the money to FCI that they had promised? What was their role in social welfare spending? So that's the other thing, which is a big question mark still, because we don't have that data yet, but that's going to play a big role. So I'll be looking out for manufacturing, trade services, and the fiscal part, which is spending on public services.
Okay, what about the agri pocket, Pranjul? How do you see that stacking up, as well as the government spending so far, and how that will influence the numbers?
Yeah, that's right. So look, we know that this second wave, which sort of took stronghold in April, has impacted rural India far more than the first wave had impacted. And so, when we get the data for April, May, June, 2-3 months down the line, then I think agri will be very weak. For today's number, which is Jan, Feb, March, we think agri will be a balanced number. We are not expecting a very strong number like in the last few quarters. We are expecting about between 2.5% to 3% growth. So normal agriculture growth, because rural India wasn't really as impacted, in the Jan, Feb, March quarter. But come April, May, June, we think agricultural growth will be much weaker.
Okay. There were a lot of, views on GDP where projections were slashed by about 2% or so in the last few months. We've been seeing that. Where do you think we're at now in terms of projected recovery? When we're looking at how to read these numbers, yes, there may be a low base effect. There may have been good corporate earnings for the last quarter, but the impact of the second wave, where exactly do you think that's going to be felt?
Yeah. So look, in terms of number themselves, I think April, May, June, the first quarter of FY22 is going to be a very weak quarter for the simple reason that we have so many local lockdowns, almost every state announcing something. But having said that, it will probably not be as weak as last year's national lockdown. So last year's national lockdown, we had seen a minus 24% quarter on quarter. This year's April to June, we are expecting a minus 13% quarter on quarter, still fairly weak. The second quarter, which is going to be July, August, September, we think will also be slightly subdued. True, we will see a pent-up demand, some recovery as local lockdowns go away. And, we're already starting to see some activity indicators move up. But generally speaking, we don't think the pent-up demand will be as strong as the pent-up demand was in the same quarter last year. So having said that, first half of the fiscal year, we think is going to be generally weak. The first quarter because of the lockdowns and the second quarter because of sustained uncertainty. Will there be a third wave? And the fact that vaccination has been weak. So generally, first half is going to be weak. We are getting excited about the numbers in the second half. We think, by October to December, India would have vaccinated a critical mass number of people, which will bring in more confidence, for moving around, doing activities, demanding services. And we're very hopeful about the second half of the fiscal year recovery. Putting all of this together, the fact that first half may not be that great, but the second half could be much better, we arrive at a GDP forecast of 8%. That is our forecast for the year. GVA forecast of 7% for the full fiscal year.
Pranjul, wanted to get in your sense as to how you're looking at the kind of fiscal policy response that we've seen, as well as the kind of supportabilities on the overall macro front from the government, and what more you believe needs to be done.
Yeah, look, I think we are really awaiting a new sort of fiscal support package. Hopefully it will come sooner rather than later. And I think there are a couple of things going for the government this time. One, in the first wave, it was mostly the urban poor who were impacted. And unfortunately, the government didn't have any program to help them. This time, a lot of the distress is in the rural poor. And the government, thankfully, has a lot of programs, that can help them. So it really actually has to just about increase its outlay for Narega, for PM Kisan, continue to be generous on food distribution. And, all of that could really help rural India, where there's a lot of distress this time around in the second wave. So I think, a program on that front will come. Alongside, if you recall, in February, the government had announced, a larger than expected capex spending for this year. I'm hoping that still continues for the simple reason that capex spending is one of the best ways to create urban jobs. So I think that should continue. In general, I think expenditure should remain high, and that's what we'll hopefully hear when the government comes out with its support package sometime soon. What is going to be the impact on fiscal deficit? Well, fiscal deficit is going to be high. Budget estimate was 6.8% of GDP for the year. It could go up by about, between 1.5% to 2% of GDP this year by our rough calculations. Of course, there are a lot of moving parts. But there are a few things that are in government support even now in terms of borrowing. One is cash balances. Not many people have noticed this, but the government has carried over a large sum of cash balances from FY21 into FY22. And that could help in financing some of the higher fiscal deficit. So there are a lot of positives in the picture. I think the government should use those positives, like, for example, the high cash balances, and announce a good social welfare scheme, which is the need of the hour.
So much for giving us the sense of how the overall macros are stacking up. As you clarified as well, that it's important to look at the GVA number this time around, but just taking stock as to what the outlook is on the overall state of the economy.